Sappi is a global company focused on providing chemical, cellulose, paper pulp and paper-based solutions to its direct and indirect customer base across more than 100 countries. Sappi has a market cap of 13 billion rand and a price-to-earnings ratio of 19. It currently pays no dividends. Sappi, there's been some consternation about the story here, overly exposed to the paper story without diversifying. Would that be a fair summation?
Yeah, I guess it all comes down to the strategic decisions made in prior generations. So Sappi, again, one of South Africa's kind of corporate titans of yesteryear. Big local production, both in terms of owning forests as well as all the mills and the facilities in Godwana and all the places, Richards Bay and all around. Now, what it does then is Eugene van As, the CEO, charismatic kind of figure in the late 70s, early 80s, takes the business global when it is possible to do so in the early 90s for South African companies, buys a big company called Scott Paper in the US, right about at the time when it becomes apparent that paper consumption in the Western world, if I can use that term, is beginning to kind of tail off and go downwards. So it's been a long, hard struggle ever since. The European market is overtraded. They are the world's largest player in coated wood-free, what I said earlier, the magazine stuff. Now that's all very well, but as we've discussed before, people are starting to read their Vanity Fair on their iPad. They're not buying Vogue magazine, which is 350 pages.
You say people are only starting to. Come on, this is a worldwide trend that is in full swing.
So it's a problem. It's a problem. And, you know, that's not the only part of their business. They also bought a big European business called MRAL. They've been a leader in terms of cutting capacity. The problem is everyone else in the industry is saying, thanks very much, Sappi, you can cut capacity. Meanwhile, you know, Sappi lumbers along from one quarterly reporting period to the next. Quite a big debt load, quite big and expensive debt that they've got to shoulder. I don't know, it just doesn't seem to be in a happy place.
Viv, can you be a little bit more enthusiastic than Paul on the Sappi story?
Unfortunately not. I mean, as Paul mentioned, Sappi is in an industry in which the supply is just too great. There's very little pricing power. I mean, Sappi has been trying to raise prices for ages now to try to get profitability back to the company, and it's never been able to push a price increase especially above what the inflation rate is, etc., to try and get some kind of return coming through. At the same time, as Paul mentioned, the debt load is quite heavy. They had to sell their operations in the stake in that Chinese operation just to make sure to pay off some debt. It doesn't have the same kind of feel as like we spoke about Nampak, in which you can foresee a story in which you can see massive growth rates coming through. Right now, I think glossy paper is still the higher margin area, but like you mentioned, the iPad is going to eat into it, and similar products coming through the line. So I don't see the kind of a story that's going to make it more.
Well, the story doesn't look any more exciting when you and Viv, if you can just take a little step back there, not into Paul, just to the side. Right. There we go. Doesn't look any more exciting when you have a look at the graph here.
The 5-year high was like 115. That's a little bit earlier, and you can see that it's currently trading around sort of 25 or something. It's tried to put its head up a few times. Remember, it is rand hedge based because it's priced lots of its products in dollars, and it has some substantial forestry reserves, and it's got a good cellulose and pulp producing business here in this country. Parts also of the board industry globally have been doing well, but I don't know, from here...
Is there anything that could turn this into a recovery story, Viv?
Look, they have to have a real strong restructuring of the company. There are assets, like Paul mentioned, that are attractive in it, but you've got to have the ability to go in and cut off the dead wood effectively, pardon the pun in this case. And it is possible, but you need to have a very aggressive strategy, a very strong management vision. And right now, I don't think that's a thing you want to be basically playing around with.
There must be something that could spark interest in the stock.
They refinanced their debt in Europe recently at 11.75% in euros, which is deep in kind of junk bond territory if you look at what European interest rates are. So that tells you that whilst the company has got a fairly substantial business, the market is of the view that it's going to be quite tough and quite tight, and that the pricing power is going to be negligible. So honestly, I can't see what that could be, because it's not as though Rolf Butker and his colleagues haven't done a lot of restructuring as it is.
Well, that's what I was going to say. Viv said you're waiting for more restructuring. They've been restructuring left, right and centre, haven't they?
So it's a constant rearguard action, trying to kind of cut your costs. They shut down another mill. They put out a conversational point in the media recently about how they took a German mill and converted it to making board because they were going to do something somewhere else. The lingo around the results announcement was very positive, but in fact the share price took a big swoon there because it read it as just another indication of the fact that there's an oversupply, the demand is weak. you know.
It doesn't sound like a stimulating story for the management team. Do you feel that they could just give up at this stage and sell off the business? I mean, I don't know, where are they going to find traction to continue lumbering along? Excuse the pun.
Sometimes what happens in these cases, look, it's got a 13 billion rand market cap, so it'd be a big check for somebody just to come in and take it off the market. But, you know, this is the sort of business sometimes it gets bought by private equity guys because they don't have the same kind of worries. They've got a higher pain threshold, so they'll take it private and then hammer it together or do something much more radical with its business model. But I don't think public shareholders are necessarily going to benefit from a situation like that. They're not going to pay a premium particularly.
Viv, hot or not on Sappi?
Not hot at all.
And Paul, hot or not?
No.